What is up, you guys, and happy new year. Tesla today, all over the place, ended up closing sideways with pretty good delivery numbers earlier this morning. And what you're going to see is that Tesla ended up opening, dropping all the way down to lows of 244, and then trading between this range. We got a couple of really good day trade positions setting up here. But I want to talk about why I ended up closing out my February calls, and I actually rolled those options out into March calls. We're going to explain exactly what that means for those of you who are newer to options. We're going to be taking a look at the weekly time frame for Tesla and why I'm still very bullish over the next couple of months. We're going to look at the S&P 500, and I'm going to share with you guys a couple of trades that I think will have massive returns going into the next month towards the middle of this video. Let's start with my Tesla 3-month analysis, which I posted on my X account this morning. You guys should definitely be following me, and if you want to be a part of our Discord community, get access to my trading bots as well as our unusual options flow and more. You can join with the link in the description for only $5 per month. The only reason that there's even a paywall there anymore is just to keep scammers and spammers out, as well as to keep the integrity and quality of the group high. So I posted earlier that my sentiment is still bullish for the next couple of months. I said that the position I have is March 15th, 2024, $250 calls. I did take a $4,000 loss earlier this morning, closing out my February calls and rolling them out to March. But remember, we are up a lot. We made about $45,000 on all of our calls back in December. So now, as we're repositioning for the next couple of months, it's okay to take some losses. You have to stop thinking about this as you see people posting on the internet like you can only win and that you should never be taking losses. But the truth is that if you're a proper portfolio manager, you're going to take losses and even small wins, just repositioning your account and managing your risk. So I did take a small loss today on that close, but we ended up re-entering with March calls. I said my thesis, I'm still bullish on this, but we're going to take longer than expected. As seen on the weekly chart below, we need to clear this consolidation zone and then we're golden. Target $280 and $300, stop loss $235. In a video we made a couple of weeks ago, we talked about how last time we had the same exact setup, the Tesla pulled back 10% before breaking out 80% the following 3 months. We believe that we could see another 5 to 10% pullback, still followed by at least a move back up to $300. What you're going to see on the screen here is going to be a weekly chart of Tesla. So please understand, we're not looking at what's happened in the past couple of days. We are looking at minimally at least this time last year. Each one of these candles represents 1 week of trading. So the bigger the time frame that you trade on or you perform technical analysis on, the stronger that all of the setups are going to be, the stronger that all of the patterns are going to be, and the stronger the support and resistance levels are going to be. For instance, a pattern like a bull flag that you see here is universal on every single time frame, but will mean a lot more on a weekly chart versus a 15-minute. You're also going to see on your screen red blocks and green blocks. These green blocks are not something that I've drawn out myself. These green blocks are actually an indicator that is showing when big money is purchasing and selling and at what prices. And you can see that most recently we had a purchase back down in December of 2022 down at $121. From there we hit highs of 288, retraced, and back in October we actually saw some more buys at 200, and since then Tesla is up about 23%. So as an options trader who is really not trying to be holding a position unless it's going not only my way but very much so in my way, I don't want to be trading a lot of the times during consolidative periods, because if the stock sits sideways within this level, all I'm going to do is end up paying money in theta decay to the person who wrote me the contracts. So in theory, I really should have waited until $260 was broken to enter my long calls for March. But I got in a little bit early, and it's only with a small position relative to how much money I really want to have in this trade. But what I'm looking for now is the retracement back down to 225, where I will plan to add to my calls, looking to take profit in the next couple of months at 275 and $300. So this will move us into the next question, which is, well, then what is break of pattern? What would actually constitute as me taking my loss here? I'm planning to have an average somewhere around $230 if we were trading shares here, with the take profit, like we said, at 300 to 325. We're setting a stop loss here at a lower low underneath prior order block support at about 195. This will give us, and remember, this is over the next 90 days minimum, this will give us a potential return of 42% to the upside and 14% to the downside. This gives us a very generous risk versus reward to play with because we are risking so little for so much for the potential breakout to the upside. I think that this is more than than worth taking a position, especially since this position and all of my positions are very small relative to the amount of capital that I'm trading. I try to keep every position to minimum 5 to 10% of my account absolute max. Let's move into the 1 hour time frame for those of you who are watching this into the week. Something to notice here is that back on the 27th, a couple of bearish order blocks came through, fell down here, and right now we're trying to hold 250 tomorrow. If we're able to push and hold, we'll potentially retest 260. If not, and unfortunately what I think is probably going to happen is if we hold under 250, the next support level we have is 235 and 220, which we said that this is really going to be our time to average down, and I would say like really the buy zone that I would be watching for. And at this point, this is when we will come back to reassess adding to this position or potentially starting a position if you're somebody who hasn't. Let's go over and take a look at the S&P 500, because as we came up last week and looked like we were pushing up to all-time highs, we definitely saw a pullback today of only 0.5%. Ever since lows back in October of 2023, we saw these order blocks come in, massive rally, continued buying sustained, and at this point here, you can see that we have hit a small resistance, and it does seem like we could see a potential retracement back down. If we were to do a Fibonacci retracement pull, basically we would come over here, take our Fibonacci retracement, and we would go from our swing low all the way up to our swing high. And the numbers that we're going to be looking for here are going to be the 0.5, the 0.618, and the 0.7s. Basically, when you're taking this Fibonacci tool, you're just taking this move. All it's doing is isolating this movement. Forget all the numbers and all the stuff that seems very confusing. We're really just isolating this move. And what we're trying to say is if we're just looking at this, when is a good time to get in for a potential move to the upside? Well, in this case, we don't want to be buying up here because the risk versus reward really isn't worth it. We really want to actually see this. We actually want to see this pull back down at least to the 0.5, which is just 50%, back down to 465. And we're not talking about a 50% pullback. We're talking about, remember, just this move that we isolated. This would be a 50% pullback of this move. So normally I would be looking to enter long here, here, and finally down here, setting a stop loss under the 768. For those of you who want to learn more about Fibonacci's, go check out our Discord community where you can get access to our courses. As we said, it's only $5 a month. I do believe that we will probably see the S&P 500 break 470 and move its way back down to 460 in the next couple of weeks. But as of right now, the bulls are still in control. Going into tomorrow, that $470 level is what we're going to be keeping an eye on. Next, we're going to move into a couple of trades. One of them is going to be a trade I closed today on Moderna that actually looks like it could still see a continued breakout. And then we're going to be talking about Disney, which has actually, I think, a huge amount of upside. And we're going to go over the exact calls I have, my targets, and everything that we're looking at. So today I closed out my Moderna calls. I opened these on Friday. I posted this within the Discord community, saying that I was getting in June 21st, $110 calls. I ended up closing them out just one trading day later for a 48% profit. I actually closed out a little bit early today. I closed when it was up about 10%, and we ended up closing the day up about 15.5%. So let's talk about why we were entering this position. You're going to see that back here on November 16th, we finally bottomed out as we saw a small amount of buying coming in. We saw Moderna continue to push up, consolidate between these levels, and as we stated in the Tesla section earlier, we're watching to trade in these thin areas of volume. We don't really want to be trading within the thick areas because we don't want to be trading within consolidation periods. We want to only be trading during major breakouts and during major crashes. So as we saw this break from 80 up to 110, I did not end up entering a position, but in theory, what we really would have wanted was to enter right here on this gap up and ran this thing all the way up to at least 100 bucks. From here, we would have exited this position and would have waited for the potential breakout. Now on Friday, I actually entered with half of the position that I totally wanted, just in case this breakout happened, because as we move into this resistance point, obviously one of two things is happening. We're either going to reject here, as we saw for a bit, or we're going to break out, which we saw happen right after. So today, as we push through this level of $100, we see all of this volume come in, and we know that we're going to see this breakout sustain. Now the question being, how far will it sustain? And you can see here that we have a big area of volume at 112 to 115, and we also have a bearish order block sitting up there as resistance. So obviously it is at this point, as we're encroaching into that resistance level that has a lot of volume, that it's probably smart for us to take our profits off the table, especially when we're up over 50% on calls that expire in 6 months. So I decided to take my profit. I'm definitely not upset by it. Now, for those of you who are saying, well, can this thing really rally from here? I mean, probably this thing's still down. The fact now that we're seeing a bit of a difference here, something that's finally happened is we've broken up over this trend line. But what I think is probably going to happen is we will reject, we will pull back, and we might get a potential inverted head and shoulders play here. And I think that Moderna, we watch for the break over 120 to potentially enter for a very long position if we wanted. But what I'm going to do is come back to this in a couple of weeks and see where we are. Now let's move into a play that is actually just setting up at this moment. I want to talk about why we're entering this and also why I picked the specific position that I did. So I ended up going with March calls because I think that this is probably going to take a bit. You're going to see that obviously Disney bounced back here on October. We had this very solid push up and then we started to move our way back down. What you're going to notice is that we have our resistance level setting up right here and we have a very solid support setting up in a falling wedge pattern. As we see support building at $90, we ended up entering today with some calls at 90, setting our stop loss underneath 89 bucks, because if this support is broken, the chances of us filling the gap back down to $85 is very high and there's no reason for us to hold some bleeding calls. From here, we will be looking for a push back up to 92, breaking through this resistance level, and the first time that we've broken and held through that trend level, and the eventual run back up to $98. I'm not expecting this to happen very quickly. I'm expecting at least the move to 94 to probably happen very quickly, but I don't think that next leg is probably going to happen until the end of January. However, with a 10% upside and a 1% downside, some options that are properly priced could be massive here. And the last thing that we're going to talk about is Las Vegas Sands. I'm not going to cover it extensively in this video, but if you go back and look at my X account, or if you follow us in Discord, or if you just watch these YouTube videos regularly, we talk a lot about unusual options activity, and we talk a lot about manipulation, and the market is not manipulated in the ways that most people probably think. People aren't out there manipulating price as easily as you probably expected, but in the options market, there are a lot of times where we'll see massive unusual buying patterns, and we have a Las Vegas Sands buyer that we have followed twice now. The first time we saw this buyer pop up was between September and October, and they were buying where I have this red setup down here, right around this level. I ended up entering here around 46 and taking a pretty solid loss for about a week and a half, as Las Vegas Sands did absolutely nothing but drop. Now, a lot of the times when there comes to insider traders, they're not going to enter right before something. So let's say that somebody knew that Investor Day was tomorrow and some big news was coming out. They're not going to go out and grab a ton of monthly calls expiring out of the money the day beforehand. The chances of them getting caught is very high. So instead, they will enter these positions prematurely. And we saw this person purchasing a lot of calls down here in October between $46 and $45. And we saw from there a massive rally all the way up to 50 bucks, which was about an 11% rally. From there, sold off drastically. And about a week and a half ago, we saw this buyer come back in around $49. We consolidated for about a week. I continued to hold on to my position. And now that we've broken over 50, I'm expecting to see Las Vegas Sands continue to rip at least back up to 54, potentially even to 60 bucks by the end of the month. And I still think there's a lot of meat on the bone, right? I entered down here at 49, but I think that with at least a move to 56, potentially 60, setting a stop loss down at 49, that we have a massive upside with a huge risk versus reward and with a big unusual buyer who is hitting some end of the month calls. I hope that this video helped, guys. Thank you for all the support. If you want to trade with me every single day, use the second link in the description. Today we closed out a ton of profits. Our day trades, we killed it. We hit about 90% success rating, closing out $10,000. Thank you guys for all the support. Check it out. You get access to all my trading bots, all of my trades, all of our live streams, courses, seminars, private and premium indicators. It's all with the second link in the description, guys. Thanks for all the support, and let's have an amazing new year. Peace.